Good morning, everyone, and welcome to the European crossover webinar. Dominic was asking about gold. We'll go in and pop into this screen real quick. So he was saying, what's up with gold? And this is what's up with gold. Look at the boon. New lows as far as rates again. And that's what's primarily driven it. You know, I was having a discussion and when we first started to move higher here with gold, when we were already making that move at the time, I remember people trying to short it in the teens. I remember that. It was like, what was about a week and a half ago or something like that. I was saying, watch out, gold one's 1323. Here's that area there. And I was making the case earlier, I mean, afterwards, or shortly afterwards, a couple of days later, and I was saying, hey, look, gold has the opportunity to go to 1375. And the reason that is because it's all about the rates. And we'd had a very minor discussion here on the European crossover about a few days afterwards. And the whole deal there with gold is, I mean, I haven't traded gold in actually quite a while. Used to trade it pretty active and just kind of got out of it. And I just don't trade it as much. I guess I could go back into it, but and probably not a bad idea since things are heating up so much. And I've been on that side of the track when you try and fade something. That's what I was telling them. Hey, look, be careful. This thing really wants to move. And there are times that, you know, when gold would make its runs and, you know, when the dollar would dip, it would certainly go and help. Or the dollar worked the other way around. But the one key thing that I kept telling people that gold's going to drive on is interest rates. I mean, there was time when we were covering gold a lot more closely. This was probably about, I don't know, about 5 months ago, 6 months ago. That's when the S&P started having some trouble. And I was like, oh, gold's going to move higher because, you know, a lot of people haven't been in gold and they're going to put a little bit of their assets into gold. Just by default, even a little bit is going to be into gold, and there's going to be a nice undertone bid. And gold did move high at that time. And at the time, I think at the time, that was the first time it had gone over 1,300. Of course, we ended up pairing back. I don't remember. We paired our back, or maybe we made up to 1290, and then we went back down to in the 1240s or something. I don't remember what the case was. I think that was it at the time. But here's the deal. The one thing gold's going to react to is interest rates. And that's what you're seeing here right now. New lows in the boon. The reason I was watching the boon closely is because that's probably also acted as a little bit of a drag here in the euro. Okay. Now the euro is still holding up. I mentioned yesterday, I picked up at 1272. I said, hey, this is a very good value area. We talked about the cash dollar index. I talked about a little level there at 97.11. The market has not been able to get beyond 97.11. We're actually traded at 96.96. I still think the dollar is going to go on and move lower, but I wanted to go and touch on that because that was an excellent reason that, you know, Dominic say, hey, what's going on with gold? And we're seeing that, you know, right now. And henceforth, it's because of the interest rates. Obviously, that's the same people I say, how can that, we talked about this before last week, how can the boon be, the yield be higher if the boon is moving higher in itself, i.e. lower rates? But of course, I think that's going to be the case for the dollar also. And the dollar is kind of edging back a little bit here. So that takes us to where we are in Mars gold and looking here with the boon. Let's go and move into the other screen. And we can see here, there's a little bit of a bid here. Not a little bit of a bid. Come on. I mean, I meant to say it's moving just a little bit here with the euro, but I talked about this being a very good value area. And here's that level we talked about. You know, our bias chart resistance for the cash dollar, we had moved it up to 97.15. But at the time, as I was saying, I go, look, there's this little level here coming in right there at, yeah, it might be 10, but I put it here for 97.11. And I thought, you know what, this market is not acting very well to start with because at the time I made the case that we made it to 97 here. Okay, started out the week, it only made it to 96, 91, and then dipped back. So we finally make it to 97, and we dip back. Okay, fine. When you go back through 97 a second time, man, we should be going gangbusters. You know what I mean? Like really pushing hard. I said, we might even go into the 97.20s. We had 97.15, but we may go into the 97.20s, and the dollar index is really struggling. So that's what I was indicating here, that I thought that level coming across here at 97.11 may end up holding the dollar. And I didn't want to wait too long on the euro. We're not seeing a great rally here in the euro, but we'll see what happens. Another key thing in the euro that may be kind of holding the euro a little bit at bay. Well, I'm off that right now. But Simon had posted, I had some trouble pulling up the meeting this morning. That's why I was kind of freaking out a little bit. Put in a app that changed passwords and stuff like that for a while. It wouldn't even let me get into my Gmail, which I was going to try and launch the thing. So I was kind of freaking out before we got started. I had actually saved it. Simon had posted the options. And we do have one at 1,300 for 4.4 billion. That's a pretty good hefty chunk of change right there. So that may keep us from moving higher or keep us in tow because, hey, look, if you've got to pay, if you're one of those folks and you got to pay if the market goes above 113 and there's 4.4 billion, there's going to be a lot of it behooves you to be selling this euro to keep it from getting up to 113. So once we get past that time, which is going to be 10 a.m. Eastern, then we can actually start to move higher. Now we'll see what happens, but that's once again my take. Look, we talked about the poor showing in the cash dollar index. Let's go and move into this, and then we'll get into the news and we'll cover the analysis. What was my take yesterday on the wrap up is we've fallen quite a bit. Okay, so it's all relative. Look how far we've fallen. We came into it 38%. We came into this level here, pretty good level here. And my take was that's a very piss poor showing so far. I mean, because you look how far we've fallen. I mean, we should have been able to rally up to potentially 97.31, maybe 97.40-ish, okay? Make the market kind of question it. I mean, we've barely even made it above 97 even. I mean, barely. So that's what I'm saying. The door's open for this market just to turn around and roll right back down. We may see that after options expiration, possibly. I don't know. We'll find out. My take was also, then we'll get to that in case you weren't available for the New York wrap-up. And we've had data that, came out here, Italian data, CPI, but had some data also before, French, as well as German wholesale prices. But my take here is when we come into the States here, we have retail sales, industrial output, capacity utilization, and we also have University of Michigan. But my take here is that the data has been underperforming, consistently. So if I'm long the dollar, I've played this into it, I'm thinking, you know what? Hey, the data's been coming in pretty crappy. I don't think I want to hang in for retail sales. You know what I mean? Let me go and take some profits. And that's my thought yesterday. I thought that was a good area to just get the heck out of Dodge, considering we weren't sitting a blast higher. And we'd already moved off of those lows, and it wasn't very much of a great showing. And certainly they've held here, so we'll see what happens. Let's go and move into the news. Australian dollar and New Zealand dollars underwater as NAB tips deeper rate cuts, and the Aussie dollar is under some trouble. And speaking of trouble, the Euro Aussie is at 63.58. That's why I was glad to get out of the, to be quite honest with you, glad to get out of the Euro Aussie at the time. I talked about if we got it close below 62.89, we could work lower. But this Aussie, like I said, when I got that short that evening, I thought we were going to come right back, and I had to hold that dog overnight. Fortunately, it paid out okay, reasonably speaking, because I think Amanda had pointed out there was a story in the Sun that they're not sure when the next rate cut is. But right now, we're reasserting ourselves. So anyway, getting back on here. It says futures imply a 66 probability that the RBA will follow up its recent quarter easing with another in July. And a reduction to 1% is considered a done deal by August. The forecast of a larger reduction reflects our judgment the economy is losing momentum and it's weaker than reflected in the Reserve Bank's recently downgraded near-term growth outlook, said NAB. The loss of momentum is apparent in private demand, which has barely grown over the past year, and more timely indicators. The shift in expectations has driven bond yields to fresh historical lows, with the yield on 3-year paper breaking under 1% barrier for the first time ever. So that's where we go. Across the Tasman Sea, the New Zealand economy has slowed much faster than expected, is now growing below its potential. A key joining the RBNZ is a seemingly perpetual struggle to lift inflation back above its inflation target. Look at this Aussie. I mean, it really is the proverbial I've fallen and I can't get up. And henceforth, we're seeing the Aussie, the Euro Aussie. If we get that daily close above 63.41, no bueno. That'll open the door to push even higher because that's a huge level. We'll get to that shortly. But I thought that was important. Very small story here as far as FX. Look, very, very, very light. Basically, once again, reference the RBA and says the Australian dollar and Swiss franc cross rates, a barometer for speculative bets, has fallen nearly 6%. In 8 weeks, indicating hedge funds are losing money on such bets. Elsewhere, the U.S. dollar gained on Friday and was on track for a biggest weekly rise in 3 weeks before U.S. retail sales data. And my concern is, look, they're actually expecting a little bit better in this data. I'll show you here. You see, they're expecting 3/10 and the prior was 1/10. Okay, so that's actually better. So you're thinking, okay, well, wait a minute, what's going on here? But my take is because data has been so disappointing, why would you want to take the chance? Especially when the dollar index has not been reacting very well. You see what I'm saying? We couldn't even get to 15. And we struggled right in here. So henceforth, that's what my take is that we can push up. We'll see what happens. We're starting to get the euro pushing up a little bit higher. Not very much, but it's not breaking new lows. And henceforth, the thought about the value area. Let's go and get into the morning bid and we'll get into the analysis. But I think that gives us an overall tone or flavor so far for the day, what we're looking at, and the boon and why the gold has extended again. Heavy going for Macron. It's been a tough week for Emmanuel Macron on Europe. Jose Natalia Loiseau, his gaffe-prone pickup to run the Liberal group running into the European Parliament. Well, I'm not interested in politics. But let's go move on to Boris Johnson. Obviously, this impacts the FX market, so certainly we don't want to look on that. Boris Johnson stronger than expected, showing the first round of the Conservative Party leadership race means the focus now is how long to come up against him in the runoff. The Guardian reports that the rivals are in discussions about the possibility of joining forces to challenge him. Members of Health Secretary Matt Hancock's team have spoken privately to advisors to fellow ministers Michael Gove and Secretary Matt Hancock's team have spoken privately, and Sajid Javid to discuss a possible alliance. It is said this could suggest that Hancock, one of the lowest scores in the first round, will say he is dropping out of the race and announce whom he will back. We'll see. Okay, in the markets, we have a trade war. But could we also be heading for a real war? Stocks are off on bonds are rallying against after the United States accused Iran of engineering the Gulf tanker attacks and sent a guided missile destroyer to the Gulf of Oman to join another U.S. destroyer. Brent soared 4.5% Thursday and are also up 0.5% this morning. World markets are choppy and Shanghai slumping. However, stocks still are set to finish the week in good shape. World stocks are due for a second week of gains, up around 4% this month. But that's thanks to growing expectations of easier monetary policy around the world. In the United States, almost 30% of traders are starting to betting on a cut at the next Fed's meeting. Wow. Holy smokes. We talked about this. I mentioned this on the daily wrap-up, that a couple of days prior, 3 days prior, it was at 17%. So now they're saying 30% are starting to bet on a cut at next week's Fed meeting. The Swiss National Bank has joined the movement, reacting to the safe haven franc's recent rise to two-year highs against the euro. However, European shares are openly lower after warning by U.S. chipmaker Broadcom, which has taken a toll on the IT sector. Let's take a look here. Data due out later today could swing the pendulum. With Chinese numbers out of the way, we all look out for the U.S. retail sales, industrial output, and University of Michigan survey. We reflected that. In the UK, BOE Governor Mark Carney is due to speak, and the BOE is probably the only central bank in the world that still insists it might raise interest rates. The problem is nobody believes it. Carney is unlikely to clear the confusion. In Europe, Italian industrial orders may cast light on the health. We did see that already, and that's it. We'll go and move into the analysis. Hang on. Well, here we are. What I'm going to do is I'll put the the support at 1256. If we get that low, I don't think that's the case, but certainly want to see what we have there. So let's look here on a fib. Okay, you can see here the 38% comes in at 1257. Well, 1256, 1256 right here. And if you were to move this one from this recent low right here, 1256 is a 61%. So good confluence there. Now, I think this is a good value area right here. But once again, if we were to take a dip, let's say that retail sales comes in stronger, where's there going to be support? Well, we're going to go with 1256. Resistance is going to be 1334. We talked about this yesterday. You see, 1324 is a good level. It is, but 1334 is where people start shaking in the boots, okay, and say, whoa, it looks like it might be pushing higher. Maybe we're going to start to push this thing higher. So it's going to be 1334 on the upside. Let's go and move into the cable. Well, we talked about this at the beginning of the week, even had it in the nation analysis, and how this market was bumping up against this. We'll move into the 2-hour chart for a little bit better, closer look. So we had said we were consolidating below this area, and to me, it looked like we would push higher. We even had this on the Asian analysis because it said, "Hey, if we can get a close we can get above this 27.44. It's going to open the door for 28.25 with a pause at 28 even. And here's your 28 even. But we just turned around and all we did was just roll back down the hill here. And henceforth, we're really having a tough time now. Here's the support level, but we're going to actually open the door for them to potentially come down here to 26.44. We shall see. And resistance is going to come in right here, 27.14, just above these highs right there. Go moving to the Aussie dollar. Boy, this thing looks sickly as all get out. I mean, in bad shape. Well, you can see where resistance is going to be. And this one, you know, it's been falling down obviously for good reason, but it looked like it had the potential to come up here to 70.27. Actually, when we were starting to make a move here, it looked like, you know, we might even push in higher coming into the 770. We had a confluence here, but man, we have just, we've talked about the importance of 70.27. We know that this goes way, 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 way back, okay? But boy, did we fade from there like the last rose of summer. And so resistance is going to come in right here at 69.44. And boy, they're expecting the RBA to cut at the next meeting, which I just happened to look up and look at the Euro Aussie at 63.60. Look, folks, we get above that 63.41 on a daily close, especially a weekly close. That opens the door for them to move higher. And if you look at this Euro Aussie, it's open. I had a couple comments that evening with Greg McKenna, and he said, "Hey, I'm pointing towards 68." And I can see that. I can see where it would. I said, "Hey, look," because I mentioned the 63.41 at the time. And I said, well, yeah, I'm just thinking this is an area where they can pause. Of course, I had to wait till the very next morning for it pause. I thought I was going to do it that evening, but it did pause. But look, we get it close. This Aussie's weakening. Got to be careful on that because this thing is unrelenting. Support now is just going to come down in here. 68.66. Let's go move into the Kiwi. Well, this is just as bad. Here's at 65.17, but I remember before the market held 64.98, I think it was. Let's see. Well, we got right here. Let's go with 65.10 for support. 65.10. Resistance will come in right there at 65.96. Let's go move into the dollar CAD. Well, we're trying to move higher again. We talked about this a couple of days ago. The market was moving higher, and I'd posted here that we, in the chat room, we had a nice resistance. Talked about it being a supply zone here between 33.29 to 33.48. And we did see a nice pullback off of that. And I mentioned that in the wrap up. I was kind of upset with myself why I didn't just go and take that. That made the most sense at the time. But here we are. We're pushing higher again here. But this thing is still on a sell mode. I mean, can it push a little bit higher? Can. We'll give it a little bit of room up in here. Here's resistance level here at 33.57. But we'd like to go with the touches, so that would come in right there. 33.66, and let's take a look at it on a fib. And 33.64 is the bias chart. I mean, bias chart is at 38%. So we'll go with that, 33.64. If it wants to push, I'm not so sure if it'll make it up there. It could, but at least you know what your risk level is. But that being said, this thing, look, we ran, the bulls ran for the hills. Okay, if someone wants to pick it up for a nice little bounce, whoever, hey, more power to you. Maybe we'd even try and push up in here. I doubt it, but possibly. But look, this thing is just on a straight up sell mode. If you're, and here's that huge 33.82. We know how many times this market held that 33.82. Look here we stab below and regain it. 33.82 is like huge, freaking huge. Let me go on in. There we go, 33.82. So any runs up there, forget about it. I mean, that's even confluencing here with the trend line. So that is just solid as a freaking rock. Look at that. 82, 82, 82, 82, 82, 82, and then on the way back, 82, 82, 82. So I think any moves toward there, I mean, we'll go with 33.66. That's the 38%. Maybe get a little bit of additional momentum. But that being said, and that might even be a good place if retail sales are coming a little bit stronger. Keep an eye on that. That may be a good area to step in if you want to hold this for the longer term for a move lower. We are expecting to move lower. We have broken below this trend line with gusto, okay? So, yeah, that might be a pretty good area right there, 33.62, to look at the 38% if we get a surprise on retail sales. And we know that this area here is just like a rock, 33.82. So let's go and mark off 33.63. 33.64, I apologize. And support, we'll take a look here on a 2-hour chart. We'll go with 33.08. That's been a key area, 33.08. Let's go with the peso. Well, we're back up here to this 1923.6. That's been actually, I think, our resistance level since Tuesday. We had the bounce for Monday, but we talked about this. We thought we might even come down to 1906. We did keep on pushing lower because I said this is probably an area where probably people thought it was a value buy, and then we went below and we kept pressing it and pressing it. We did make it quite to 1906. We did make it down here to 1908.9, so not too far off, but it still remains 1923.6. That's a huge, huge, huge level. So 1923.6, no changes there. Let's take a look on the 2-hour chart. We're coming right there, 1914.2. Let's go moving to the dollar yen. Well, we had this 876 earlier in the week, and it's kept this yen pretty much capped. Even when it looked like the yen was going to try and bounce, we talked about it since last week. We called it the canary in the coal mine. And it really wasn't believing this rally in equities. I mean, equities are still holding up, but for different reasons because they think the Fed's going to cut. But there's been that concern that as a safe haven flow. And we haven't been able to rally up any higher. We actually moved this down. I think we moved at the time, we moved it down to 851, and then I guess we adjusted again. 853. And we haven't done anything with this. We'll keep the 853, although at this point you could make the case that now it's even pushing down, potentially now down to 837. And we had 805 as our support. Market's trading quite quiet, but the dollar yen's been like that, where it trades quiet and all of a sudden, whoop, we just make a good little slide. And we could still see that. We'll just move this down to 108 for now. And we'll move into the cash dollar index. Well, we'll see what happens today after retail sales. Now, here's the deal. You got to be careful with, and I mentioned that at the beginning of the show. Simon posted the options that are going off the board. Today we have the 113 strike at 4.4 billion on the euro. So we know that's going to keep the euro in check, because if you're one of the firms that wrote wrote calls against that, it's, you're going to be trying to beat this euro down every time it tries to pop its head above the water. You got to defend that 113, because if you're on that other side of the trade, because you're going to pay a heavy price, because once it gets beyond 113, then you're going to start pushing higher, and it's just a matter of how much the loss is going to add up. So with a big strike like that at 113, it's going to behoove the market to hold the euro down. So just keep selling against it. Don't give it a chance to get up. So that may, until then, allow this dollar index to pop up. We still have the 97.15. I still think we can work lower, but obviously when we get the data to come out this morning, the dollar could get a little bit of a free rein. Because of that, we talk about that option, as I mentioned, I think it was 4.4 billion at the 113 strike. So they're going to try and keep this thing, just keep pushing it lower, hold it from getting close up there. So when we look out here on the cash dollar index, we're looking at the 2-hour chart. Let's go with this 97.21. We could push higher if we got a good surprise on the data, but you don't want to be caught with your pants down. So that way, that was we're looking at, I mentioned yesterday, this 97.11, and the market has not been able to push beyond that. What if it comes in a surprise a little bit on the higher side? Well, then we would push and we could gun some stops. So at least you'll know where that area is potentially we could make it up to 25 right here. I don't think that's going to be the case, but you want to know where this market could potentially go to. But this is the area right here, 97.21. So let's mark that off. But that 97.11 is even still holding. And for support, we're going to go down here and we'll go with 96.69. We had 70, which is maybe just a hair lower. With that, let's go move into the cross rates. As I mentioned, we have data coming out at 8:30 Eastern, retail sales. We do have capacity, industrial production capacity utilization at 9:15. Obviously, I'm in the Central Time, so that's why these times should add an hour onto that. And then 10 a.m. Eastern, we do have business inventories, and we have preliminary University of Michigan. Actually, look on and that we had 100 prior, and they're looking for a little bit of a dip down to 98. So a little bit weakening, which kind of plays into, remember how we've been getting the weaker data all along. Let's look at the Kiwi yen. Well, this continues to fall over. I've been talking about that. Look at that. It's just been drip, 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 drip. Coming to this area here, 70.70, right there, 70.67. Doesn't mean it won't break lower, but that's the resist support for right now. Let's take a look at this on the 2-hour. Resistance is right there, 71.02. Actually, we're a little bit higher, just a tad higher. It's going to come in right there at 71.15. I don't think we'll get anywhere close to that, but that's where the resistance would be. Let's go into the euro yen. Looks like we did come into that support area here, this level. See right there, 21.95. That'll be our support here. Let's go into the 2-hour. Boy, that's been a beauty on the exponential moving average. Look at that. But I use my movie on the. I use it against the 30-minute, but this is on the 2-hour. Right there. 22.26. Call it 22.27 for resistance for right now. Well, once again, if we get the euro turning things around, we could really get a nice little lift. Let's actually move that up into here, which would be, let's go with 22.33. Something much higher. 22.34. Okay, we were talking earlier about the euro odd. Look, folks, you got to be careful on this one. I am glad I'm out of this one. As I told you, my trade worked out okay, but I do not like holding positions overnight. I mean, the euro to me would have been different, but I'm talking about the euro versus the dollar. But look, one of the things we covered at the very beginning of the week was on the euro Aussie. We had said the euro odd has successfully defended the 1695 area. Now, this is before Monday, okay? So over the week, last weekend. And breaking above a short-term trend line and upside challenge of 62.62 is in the cards. We got to it. I think we got to it on Monday or Tuesday with a pause at 62 even. Support of 61.32, blah, 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 blah. EMAs are supportive because you look at this on the EMAs. You see how it's been just hugging this thing on the lows, and we defended that 16.95. You see like right here, there. So it's defended it. And the exponential moving averages were supportive, and then we broke this trend line. This points for a whole heck of a lot higher. Like I told you, I had a discussion with Greg McKenna, and that evening, he was posting something about the data, and I said, hey, I think, got some resistance here at 63.41. And he had pointed out, he goes, well, I'm looking for 68. And I go, well, I'm just looking for a pause. He goes, oh, yeah, I'm looking much longer term. And certainly everything suggests that. You see what I'm saying? We did. I mean, look at this. I thought, you see here in the two daily bars, I thought if we could have pushed a little bit lower yesterday and closed down here, we could have had like a nice little gravestone doji. The wick would have been a little bit long, but it would have opened the door for us to move lower, okay? But look, here we are coming back with gangbusters, and it's a Friday. And now the end of the week. If we close above this 63.41, look at that. No bueno. No bueno. Because anybody that's long, there's no reason for them to go on and cover. I mean, not cover, but exit, because you still have the momentum working with you. So be careful with that. So we'll still stick with the 63.41. Needs to close above it. Let's see what happens. And as far as support, let's move into the 2-hour chart. We had that 62.89. Short-term basis can be right there. 63.16 on a very short-term basis. 63.09 was that kind of determinant factor right there. So that's right there. 60. It's called 63.10. Let's call it 63.10. And 63.09 was actually the area that evening where the market, it dipped to 9, might have got to 8 or something, and then turned around and flipped around. So let's call it 63.09. We'll go with that. Let's take a look here with the Euro QE. This pair's coming back, and it's now back up above this key 72.21. Look at that. And it's still pushing higher. Resistance is right there, 72.76. Let's call it 72.76. Support now comes in right there at 72.01. Let's go moving to the Aussie. Well, I called this the death march. And, initially we were I don't say targeting, because that wasn't necessarily the case, but I was looking for a move to 74, 73. We actually moved the bias chart support down here to the 61%, which is 74.47. We moved it to that yesterday. You can see it right there. We've actually gone as low as 74.60. So 74.47 is still going to stand. Okay. Let's take a look on the 2-hour chart. This obviously looks like hell. Resistance is right there, 74.93. Take a look at the guppy. Holy smokes, just as bad. Here we go, sliding back down again. Support's going to be right there at 36.76. This is 78%, so we're just about hit that 78%. Remember how with cable, of course, isn't cable, but loves the blue horseshoe, loves the 78%. That may hold in here, but we do have the 36.76, just a little bit lower. Actually, if you come down here, it comes in. Let's go with that 36. A lot of good value in here, a lot of volume. Let's go with 36.80. Resistance. $37.34. Well, everything's gained against the odd. Resistance is going to be the level right here, 84.14. Go with 82.95. We'll call it 82.93. Let's give it a little extra room. And there's the bias chart for today. I'll get that posted in the room. And don't forget, we have 4.4 billion on the strike, 113. That's going to keep a lid on the euro. Then, of course, we have retail sales data. I think that would not be as good as some people would like. But then again, the strike may keep the euro from moving. Once we get past that strike at 10 a.m., watch out. We could make that move. Let's see what happens with the dollar index. Also, the dollar CAD, look at that 33.64. If we do get a jump on some good data, that's a 38%. Thanks for joining us here on the wrap up, and we'll catch you later in the room.